Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. First point of the agenda is the S&P 500 technical analysis on the weekly chart. So here I will show you the weekly chart. Now there are 3 red candles on the weekly chart. Also on the weekly chart, S&P 500 has lost the support of the 2 of the strong moving averages. This means that any reversal is expected to the moving averages themselves, okay, and also the moving averages are approximately at my calculated level. This means that any bullish retrace or any bullish reversal is going to face heavy struggle, okay, there will be heavy struggle, and only if there comes a short squeeze, okay, then the market will be, S&P 500 will be able to clear. Otherwise chances are very less. This means that we are anticipating a bullish retrace, it will be there, but this bullish retrace, if it struggles, then this will be the continuation of the bearish trend, okay, or we can say that irrespective of anything, bullish, bearish, eventually it will turn into bearish because the trend has changed, okay. So I will discuss the weekly chart. Weekly chart is the big picture, the long term picture, okay. Second point of the agenda is the S&P 500 technical analysis on the daily chart. Now this is the daily chart, okay, that is there in the picture, and as I mentioned that there is an absolute saturation in case of the S&P 500 and also Nasdaq, okay, that is there. This means that now the entire market is ready for the reversal, although it was supposed to give a reversal on Friday itself, but because the first hourly candle closed, the first hourly candle has failed to close or to sustain in a particular condition, that is why there was more bearish movement, okay. But again and again it has it tried, okay, 2 or 3 times, but again it failed. Anyways, because of this special condition, now we are anticipating a bullish retrace, but there will be a condition for the bullish retrace, okay. Before that it can go bearish, right? So there will be like 2 conditions. Either there might come a gap up open, a surprise gap up open, or there might come a gap down open, and then it can come down to fulfill the condition or the obligation to 4921. Once it tests the 4921, then a bullish retrace. No matter what, there will be a bullish retrace, okay, but there will be some conditions. I will discuss that on the daily chart, okay. Third point of the agenda is the probable movement of the S&P 500 from April 22nd, which is Monday, to April 26th, that will be Friday. So whatever is going to happen in the S&P 500 in the next week from Monday through Friday, I am going to discuss here in this, the last point of the agenda. Now guys, I am going to begin with this, the first point of the agenda of this S&P 500 weekly technical analysis. Now guys, this is the weekly chart. So this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay. So guys, before I discuss this, the weekly chart, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these, the daily and the precise updates of the S&P 500 from Monday through Friday, each and everything every day, the probable movement, the precise movement, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, let's discuss this, the candle. If you look into the candle, this is a very heavy bearish candle. And in my previous S&P 500 weekly technical analysis, I have discussed a concept of 3 black crows. So what is this, the 3 black crows or the 3 white soldiers? Okay, 3 white soldiers come when there are 3 green candles, okay, in a special pattern. Similarly, the 3 black crows come when there are 3 red candles in a special pattern. However, these 3 candles, these 2 candles might be considered we can say are acceptable, but this is a third candle, okay, it is not in the pattern. This means that the 3 black crows pattern is not applicable here. So what happens when there comes 3 black crows, 3 red candles in a special pattern? Then there comes a reversal. This reversal is not limited to 1 day or 1 week, but this reversal is there for many days. So what it indicates? This simply indicates that there are bearish sentiments in the market, okay, or heavy bearish sentiments, and there is heavy bearish pressure on the entire market. This will be there and this will remain in the picture. Even if there comes any kind of reversal, retrace, then also it will be there and it will remain in the picture. So how it is going to impact the movement of the market? The impact will be that the S&P 500 has lost the support of this moving average, this moving average. Now it is going to find the support here at this moving average, and this moving average is a little away from 4921. This means that even though we are anticipating that S&P 500 can come down to a maximum of 4921, but because of this the moving average, we can anticipate that there will be more fall even beyond 4921. But yes, what will happen eventually is that even if it comes down, hit the moving average, then it will get a reversal, it will get a bullish retrace, and it will be back above 4921. Now there is one more thing, and it is regarding the gap up open or the gap down open. Because of the formation of this very heavy bearish candle, there are good chances of seeing a gap down open. So however, this is not 100% confirmed. Why this is not 100% confirmed? Because the SRSI, stochastic RSI, on the daily chart of the S&P 500 is at the absolute saturation, and 2 days, 2 consecutive, okay, these are the days of this absolute saturation. Okay, however, when we look into this, the Dow Jones, this is what, this is the Dow Jones, okay, and Dow Jones has suffered the least. Now in case of the Dow Jones, if you notice, there is a bearish candle and there are these the 3 bearish candles, okay, and this is a special pattern, okay, in case of the bearish candle, where it says that there will be a reversal, a retrace because of the spindle, but at the same time because of the formation of this candle, it is allowing, or it says that there will be more bearish movement. This means that there will be bearish movement, fine, but then there will be a reversal, a retrace. Okay, this is what it indicates, the weekly chart of the Dow Jones. Okay, it indicates this kind of movement. So this justifies the movement in the S&P 500, that there is a moving average, there is also a 4921. Okay, this is my very heavy support level. So all of this indicates that yes, a bearish movement to 4921 is fairly possible. Okay, but even though, or even if it comes down, then also there is a very strong probability, very heavy chances that there will be a bullish retrace, a bullish reversal. However, this bullish retrace or bullish reversal might not be seen for the entire week, okay, or for 3-4 days. This might be seen only for 1 or 2 days, only for 1 or 2 days. Why 1 or 2 days? I will discuss this in the second point of the agenda, okay, on the daily chart. Okay, now let's talk about the technical indicators, and now the technicals. Okay, in terms of the technical indicators, what we can see is clear fan out in the moving averages, but the closing is inside the moving averages. Moving averages are neutral. Other than that, the Chimoku, Bollinger Band, etc., everything is bullish, fine. Okay, saturation is not, so it is not saturated anymore. Okay, and it is so it is neither saturated nor overbought. It was saturated and overbought, and this has resulted in this the heavy failure. Now what is more special, or what is very much special, okay, in this particular case, in this the particular week, it is the MACD. MACD has now given a bearish crossover. You can clearly see that the signal has crossed over the MACD, and now so from mid of November, okay, until this week, okay, last week, it was trading bullish, but now it has changed to bearish. Okay, so after 5 months it has changed to bearish. This means that, and see, this is why I am saying that the trend has changed. Okay, so see, the trend was changed in the Dow Jones. Actually it was on Monday. So in my pre-market analysis, I mentioned this to my Patreon community members, that the trend has changed to bearish in the Dow Jones. This means that now the same will be replicated on the entire US stock market. Okay, and everything will come under pressure. And as I mentioned earlier a lot of times, that MACD gives a very linear movement. If it has changed to bullish, then it will remain bullish for many weeks or months. If it has changed to bearish, then it will remain bearish for many weeks and months. Last time when it changed to bearish, S&P 500 came down to 4,100, right? And now then it changed to bullish, and the S&P 500 hit 5,200 something. Now it has changed to bearish. This means that again this is the bearish cycle. Okay, so this is the beginning of this the bearish cycle, right? But this is just one thing. What is the other important thing? This is the stochastic RSI. Stochastic RSI finally again it was there. It was there in the means it has changed to bullish from the last week of October, and now okay it has changed to bearish. Okay, after 5 or 6 months. And now as you know that as the concept says, okay, so what does this the concept say? The concept says that whenever the MACD and the stochastic RSI are aligned in a particular direction, then this direction becomes the direction of the market. If it is bearish, then market will go bearish. If it is bullish, then the market will remain bullish or the market will go bullish. In this particular case, it is bearish. What it means? This means that now it doesn't matter what kind of retrace will be there, short squeeze or normal retrace, doesn't matter. The trend has changed. This means that any reversal, any bullish retrace, bullish reversal will be seen as an opportunity to go bearish, because now now the trend has changed to bearish. Okay, so I hope this is clear. And yes, one more thing about this is the Dow Jones. Okay, and this the same condition is there in the Dow Jones, but Dow Jones is giving heavy bearish sentiments, okay, as compared to the Nasdaq or the S&P 500. So the Nasdaq and the S&P 500, they have to suffer more, a little more, okay, before we can say that they are going to stable or they are going to stabilize. Okay, yes, in case of the Dow Jones, if you notice the stochastic RSI, okay, looks like that it has hit the saturation, but in actual it is not. Okay, so we need to see that what happens on Monday, and accordingly if the movement on Monday, if it forces the Dow Jones to hit the stochastic to hit the zero, the Dow Jones stochastic RSI to hit the zero, means the saturation in the bearish side on the weekly chart. This means that now all of the conditions are saying that even though there come more bearish movement, but at the same time there will be a bullish retrace, no doubt about that. So guys, I have one more information to share with you, that this is my S&P 500 knowledge transfer program, or the stock market knowledge transfer program. Through this program I teach the movement, strategies, trend analysis, technicals, predictions. Predictions means how to predict the movement in the stock, okay, or in an index even before it happens. Okay, then the support and resistance levels, as you know that my support and resistance levels, okay, they are pretty much accurate, okay, for the S&P 500 and the Dow Jones, Nasdaq, okay, etc., and much more. Okay, so the motto of the program is to help you become self-reliant. Okay, and this program is delivered one-on-one basis, and this is my email address. And one more thing, that this program is not just for the S&P 500, but because we'll be talking about the technicals, okay, analysis, etc., this means that this logic, it can be applied to any stock, any index, any currency, any commodity, any crypto, anything that is traded in the stock market. The concepts, the technicals, the logics can be applied and they will work. Okay, so this program is delivered one-on-one basis, and this is my email address. Whenever you want to participate, or if you have any question, then you can drop me an email. And this is the Google spreadsheet. Okay, more information is there in detail in this the Google spreadsheet. And when you open this the Google spreadsheet, then you will notice that I've discussed each and everything in detail. Okay, what I'm going to cover, okay, the options, the live options calculations, the live options trading, okay, and the strategies, okay, the analysis, the price prediction, the trend prediction, okay, each and everything. And other than that, these are some important terms and conditions. Okay, and these are the snapshots of the meetings. So guys, whenever you want to participate, this is my email address. Okay, you can simply drop me an email, or if you have any question, you can simply drop me an email. And also I've given the link to this program in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here in this the second point of the agenda, I will do the technical analysis of the S&P 500 on the daily chart. So this is the daily chart, D as in daily chart. Daily chart means that one candle represents one day, not 1 week or 1 hour. One candle means one day. So before I discuss the technicals and the movement, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these the daily precise updates of the S&P 500, the precise movement of the S&P 500 from Monday through Friday, each and every day, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, let's discuss the candle first. This is the last candle. Okay, it's a good bearish candle. Okay, but the closing of the candle was not approximately equal to the low of the candle. Okay, what it indicates, and also there is no defined shape of the candle. So this simply indicates that there are good or heavy bearish sentiments, okay, in the US stock market, and this can result in a potential gap down open on Monday. However, once again, gap down open is not 100% confirmed, because this on the daily chart, the S&P 500, okay, is trading at the absolute saturation. Okay, and whenever there comes a saturation, then the saturation has the power and the potential to override all of the technicals. Okay, that is why it is not 100% confirmed. Rather, there may come a gap up open. Now let's talk about the technicals, the technical indicators. Okay, as you can clearly see, okay, or if you have subscribed to my YouTube channel, then I rely heavily on the moving averages. Okay, now if you look into these, the moving averages, then now so this was the fan out in the bull side, this is the fan out in the bearish side. There was a clear crossover in the moving averages on Monday itself. And on Tuesday, I've informed my Patreon community members that now the trend has changed, because the Dow Jones has given 2 consecutive closings below the Ichimoku cloud as well as below the strong resistance level, and also there is a confirmed bearish crossover in the S&P 500 in the moving averages of the S&P 500. This means bearish, and whatever bullish will be there, it will be limited. Rather, bearish, more and more fall is going to come. So now the moving averages are bearish, absolutely bearish. Other than that, the closing is also below the moving averages, bearish. Okay, these technicals have also changed to the bearish. Okay, and other technical indicators. Okay, MACD clearly bearish, and once again let me tell you, okay, just for your knowledge, that MACD always gave a linear movement. Okay, and this the movement that we have seen, this movement itself was confirming that S&P 500 is struggling to move up. Okay, and it can come down any day, any time, any movement. Okay, and then we have seen a very linear movement in the MACD, and you can clearly see that the S&P 500, it started to come down. Okay, so there are these are 2 things, okay, that we derive through the MACD. Number one, that the direction is clearly bearish. Other than that, the numbers of the MACD are now negative. The signal is negative, MACD is negative. This indicates that now we have entered into the bearish side of the, okay, or simply we have entered into the bearish side. Okay, this further confirms the there's a change of trend. Okay, so MACD itself is confirming everything, and MACD is the standard, and or we can say that MACD is the only indicator which is used by all of these technical traders. Okay, they use other technical indicators, but one thing is common, that is the MACD. Okay, stochastic RSI clearly absolutely saturated. Stochastic RSI for 2 consecutive days absolutely saturated. The saturation started to happen from Tuesday itself. Okay, then on Wednesday, but on the last 2 days we have seen absolute saturation. Okay, and the K channel and the D channel are at absolute 0. Okay, saturation. Other than that, yes, stochastic RSI is there. Now, yes, if there comes one more bearish candle on Monday, or if there comes an initial bearish movement on Monday, then the S&P 500 will enter into the oversold condition. Remember, this was overbought condition. Now, because of this back-to-back red candles, it will enter into the oversold condition, or on the lower level charts, it is already in the oversold condition. Okay, that is why I am saying that there is a very strong probability technically there is a very strong probability for a reversal, for a bearish retrace. Okay, and short squeeze may or may not happen. Okay, this will I will be able to see whether the short squeeze is happening or not only when the market comes into the session. So if you are my Patreon community member, then on Monday itself, okay, we'll see whether the short squeeze is going to happen or not. Okay, so I will give you the numbers and the levels, and if those numbers, or sorry, if these the levels are, if the S&P 500 breaches these the levels, then the short squeeze will be there and more bull side movement will happen. Otherwise it will remain up to this the level and it will give up. So you can trade accordingly. So through all of these the technical indicators, okay, what we can see is that the S&P 500 on the daily chart is 90% bearish. However, on the weekly chart, S&P 500 is 65% bearish. Okay, last week it was 50-50. I have shown you through in my previous S&P 500 weekly technical analysis. But this week 65% bearish, 90% bearish. This means that 75% bearish overall, considering the weekly and the daily chart. Last week this was only 50%, but now 75% clearly bearish. Okay, this is the daily chart. Now there is one more thing on this, the daily chart. Okay, and this is especially, this is very, very important. If you look into this, the Dow Jones, and the Dow Jones is very, very near to its 200 day moving average. Okay, so what it means, this means that because last week Nasdaq gave up 6.5%, S&P 500 gave up 3.5%, but the Dow Jones gave up only 1.5%. Okay, so if we calculate, then from here to 200 day moving average, the S&P 500 is 3.5, the Dow Jones is 3.5%. This means that if the bearish movement continues, see the reversal that I mentioned, or the retrace I mentioned, it will be there only for 1 or 2 days because of the S&P 500 and the Nasdaq. So let's say if there comes a reversal or the retrace for 1 day or 2 days, then what will happen? Then it will open more room in the bearish side, and then there will be a fall, and 3.5% Dow Jones can achieve. If there comes 3.5% in the Dow Jones, then it will force the S&P 500 to come down heavily, very, very heavily. Okay, and you can see that the 200 day moving average, okay, it is in the 47xx of the S&P 500, right? But still the most important part here is the saturation. There will always be a fear of a bullish retrace, a bullish reversal, as long as S&P 500 is trading red. It must come, it must give at least one bullish candle, one bullish closing. Okay, whether it is small or big, okay, or this the low or high, doesn't matter, but it must be bullish. That's the thing, it must be bullish. Okay, because once it gives a bullish closing, then it will be then it will come out of the saturation, and it will create more room in the bearish side, and more red color will be there in the entire market. More red color, more fall, more bearish movement. And once again, it will be the S&P 500 and the Nasdaq, okay, these two which are going to suffer the most. Dow Jones will suffer the least, and Nasdaq will suffer heavily, then S&P 500, and then the Dow Jones. Anyways, whatever is happening, whatever will happen, I will keep you posted through these the daily precise updates of the S&P 500, the precise analysis, the precise probable movement every day from Monday through Friday to my Patreon community members. So guys, if you are also looking for these the daily precise movement, the precise updates of the S&P 500 from Monday through Friday, and you want to trade the bearish side, the red candles confidently, then you can join my Patreon community. And it is not just about these the daily precise update, the precise analysis of the S&P 500 which I give to my Patreon community members. I also give these the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market. So guys, whenever you want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here on my Patreon page, you will see that there are these 2 levels or 2 tiers. This is daily S&P 500 updates for non-US and Canada residents. This is daily S&P 500 updates for US and Canada residents. So whenever you subscribe to either of these, then you'll be getting the daily S&P 500 analysis, precise updates, the precise probable movement, as well as the stock market opportunities minimum 5 to 10 every week in the premium stocks of the US stock market. And guys, if you notice that many people have joined my Patreon community for last many weeks, months, years, and they are getting these the daily and the precise updates, the precise analysis, precise probable movement every day. They know what is happening, what is going to happen in the S&P 500 and in the US stock market, and they are very well aware of it. So whenever guys you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I'm going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500 for the next week, and I will tell you that what is going to happen in the S&P 500 from April 22nd, which is Monday, to April 26th, that will be Friday. So whatever will happen here from Monday through Friday, I will discuss here. Okay. So guys, before I begin, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these the daily and the precise updates, the precise analysis of the S&P 500 from Monday through Friday, and you want to trade the bearish market with confidence, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So guys, a few things that you must know. Number one, there is nothing, okay, until Wednesday. Until Wednesday, there is nothing. On Wednesday and Wednesday onwards, okay, what will happen? Meta, okay, and then on Thursday, I think Thursday after market hours, Microsoft, Apple, okay, and Friday, okay, there is one more company. So these giants are going to post the earnings, and we know that whenever these giants they post the earnings, then it impacts heavily the movement of the stock market. Okay, so Wednesday onwards we can expect more volatility in the entire US stock market. Now one more thing is there, it is Friday. On Friday, that will be April 26th, Friday, core PCE data, PCE and the core PCE data will be published. This means that Friday will be heavily volatile. Heavily volatile means either we can see a very heavy bullish movement or we can see a very heavy bearish movement. But because the trend is bearish, this means that even if the earnings and these things are seen neutral, then also it will go in favor of the trend, means bearish, and there will be very heavy fall. Okay, only and only if the earnings are exceptionally good and the core PC and the PC indicates, okay, that inflation is okay, it is coming down, means everything comes into the in the favor of the stock market, then only there will be bullish movement. Otherwise, in all of the cases, known or unknown, it will be a heavy bearish movement. Okay, so I will mention this, okay, in my pre-market update to my Patreon community members, okay, on Friday, and before that, okay, every day in the pre-market update and the subsequent updates. Okay, what we know is that S&P 500 has hit or has given 2 consecutive absolute saturation, okay, where K channel and the D channel of the stochastic RSI are at absolute 0. Nasdaq has also hit the absolute saturation, means the same condition, K and D are 0. Okay, but because of this formation of this candle, heavy bearish candle on Friday on the daily chart, as well as a heavy bearish candle on the weekly chart in the S&P 500, and a technical bearish candle and the bearish candles on the weekly chart of the Dow Jones, all of these indicates a gap down open on Monday. Okay, if the saturation would not have been there, then gap down open was 100% confirmed. Okay, without any doubt, a gap down open. But because the saturation is there in the S&P 500 as well as in the Nasdaq, and because the saturation has the potential to override this condition, this means that the gap down is not 100% confirmed. Now the S&P 500, okay, it has changed to bearish. Okay, it is 90% bearish. Okay, no doubt about that. Ichimoku, it is getting the support of the Ichimoku cloud itself and nothing else. Okay, but because after a long time S&P 500 is coming here, okay, it is trading inside the Ichimoku cloud. This means that it has the valid reasons to get support from the Ichimoku cloud, and in order to get support from the Ichimoku cloud, all it need to do is to sustain and close above the lower level of the Chimoku cloud. And if you are a technical person, then you know that the boundary of the Chimoku cloud, or even if you are a non-technical person, then it is very very simple, that the boundary of the Chimoku cloud itself, it acts as support and resistance level for the S&P 500. So you can clearly see that on Tuesday, okay, it tried to move up, but it failed at the boundary of the Chimoku cloud. It remained, okay, below, and okay, this was the condition. This, okay, it always happens. Okay, so this means that the S&P 500 has a valid chance and a valid technical reason to support or to get a support here at the Chimoku, at the boundary of the Chimoku cloud, and for that to happen it has to come down, and when it comes down, then there will be very heavy probability of 4921, because 4921 is just below the Chimoku cloud. This means S&P 500 will have to breach the Chimoku cloud, and that is fairly possible, because we always focus on the closings. Okay, where it is closing is what matters. Okay, intraday breach up down, that doesn't matter. Okay, only the closing, because even if it comes down, okay, but it gets a retrace, it closes above the Chimoku cloud. Okay, and if, see, this is a particular very very special condition, if on Monday, as of now, S&P 500 is already under technical pressure to give a bullish retrace. Okay, but if the bearish pressure is still seen on Monday, okay, and it comes down, and remember, as long as it is trading red, as long as it is trading below 4967 what? Okay, what was 4967? 4967 is the closing of this, the last candle. Okay, as long as S&P 500 is trading below 4967, it will be highly risky. It will be highly risky for the bears, not for the bulls, for the bears. Okay, because it is already under technical compulsion to give a bullish retrace, and for some reason we do not know why it is not happening. Okay, but for some reason, okay, it is still trading bearish. So if it trades below 4967 on Monday, then be very very careful of a bearish trap. Okay, in this side we were talking about the bullish trap. There were bullish traps, but now we are talking about the bearish trap. Okay, so if it trades below 4967 on Monday, then definitely there will always be a fear of a sudden and very heavy bullish retrace. Okay, now I was talking about that if it comes down, okay, and if it gives a closing above the Chimoku cloud, but the closing remains below 4967, but is above the Chimoku cloud, in between these the two levels, in that case there will be like 200% probability, very heavy, very high probability, that irrespective of anything there will be a bullish reversal on Tuesday. Why there will be 200% probability? Because when it trades below 4967 on Monday, 4967 was the closing of this candle, it trades below 4967 on Monday, then the S&P 500 will enter into the oversold condition. It is already heavily saturated, and now it will enter into the oversold condition. Okay, it is already in the oversold condition on the 4-hourly charts. And if you are my Patreon community member, then you know that for last 2 or 3 days I mentioned that S&P 500 on the 4-hourly chart is saturated. Okay, so as this, the saturation is not just on the daily chart. No, it is also on the 4-hourly chart. So you can understand that there is a very heavy, it is like a volcano, okay, which is just waiting for the eruption, right? So it is already under heavy technical pressure to give a bullish retrace. Okay, and if there comes a bullish retrace on, and I will say that there should come a bullish retrace, so that it can create an opportunity to go bearish again. So it will be a blessing in disguise for the bears. And also, even if the closing is not seen in between these two, 4967 and the Chimoku cloud, but the closing is seen, as long as the closing is seen below 4967, this condition of 200% bullish retrace will be applicable on Tuesday, including a gap up open. Okay, that is clear. Now there is one more thing in this, the bearish side. Okay, because when the S&P 500 will be here, okay, when it will be around this, the Ichimoku cloud, the boundary of the Ichimoku cloud, it will be very very near to the 4921. This means that 4921, okay, what was 4921? If you notice, 4921, okay, as I mentioned earlier, 4921 is my calculated support and resistance level, in this case support level. And as I mentioned earlier also many a times, then when the S&P 500 was moving up, I have mentioned that it will, this the upward movement, okay, this upward movement will be maximum up to 4921, then there will be a fall only when there comes a sustained movement, then it will be able to move up, otherwise it will remain below 4921. 4921 has proven itself again and again, okay. So I'm not going to discuss this, okay, much in detail, but I've discussed this, okay, in detail in my previous S&P 500 weekly technical analysis. But the problem is that 4921 itself may not be able to handle the fall if there comes more fall, okay, because on the weekly chart there is a very strong support this through the moving average, okay, and this is in the 48xx. This means that S&P 500 has very good chances to breach the 4921 and to come and to find support at 48xx. There is a very strong moving average on the weekly chart, okay, but I strongly suspect that on Monday itself it can do it. Why? Again the same reason, absolute saturation. If it trade below 4967, it will enter into the oversold condition, okay, oversold in this the bearish side, okay, and 4-hourly chart it is already in this the condition, so it is already under a technical obligation, already under a technical condition to give a heavy bullish trace, okay. This means that if it comes down on Monday, then at most to 4921 will be able to handle, okay. It need not to come down to 48xx, maximum up to 4921, a little bit, okay, a little up down is okay, perfectly accept, and that will be acceptable. This means a movement to 48xx or even below or to its 200-day moving average can be seen once there comes a bullish trace, okay, for 1 or 2 days or so. Once there comes a bullish trace, it opens the opportunity to go bearish, and then it gives back to back very heavy bearish candles every day, 2% fall or so, okay. Then this condition will be there. And guys, as I mentioned earlier also, that there is a difference between the bearish movement and the bullish movement. Means whatever profits you are making in this the bearish movement in one day, okay, for the same profits to happen in the bullish side, you need minimum 4 to 5 days. So bull side is slow, okay, bearish side is heavy. That is why people who do not know how to trade the bearish side, they lose a lot. They lose a lot of money, particularly in the bearish side, because in the bullish trend you need not to know anything. Okay, even if you have joined the stock market recently, if you have opened your broker account recently, you can still make money because it's the bullish trend, everything will go up, you need not to be worried about anything. But when it comes to the bearish side, then it becomes very, very difficult, because it is not easy to trade in the bearish side. But yes, one thing is sure that you are going to make more than enough money in the bearish side, okay, what you can make in this the bull side. You can clearly see 400%, 600%, 300%, 200% in the bearish side. Anyways, I was discussing the 4921, 48xx or so, okay. So this means that any movement in the bearish side, okay, either in the first half of the week, Monday, Tuesday, Wednesday, okay, or in the second half of the week, is expected to be limited to the 200-day moving average. 200-day moving average is somewhere around 4730. And remember that this is the moving average. Moving average means every day the number will change, okay. So the 4730, this means that it will remain around, okay, 4730, 4720, somewhere around, okay, wherever it will be. Or in terms of the fall, if we calculate from the last closing, it is expected to be up to 4.7%, and 4.7% is perfectly fine, okay. As I mentioned that S&P 500 has the potential to give 4% to 5% fall within a day, and here I am talking about 4.7% fall. And because now the market is already under pressure, everything is bearish, the trend has changed to bearish, so 4.7%, okay, it's not a big deal. S&P 500 can achieve 4.7%, okay, within a week. But everything depends on what happens to this the boundary of the Chimoku cloud and the 4921. These two are very, very important. These two will define whether there will be a bullish retrace or there will be more bearish movement. Or you can simply simply say that there is a small zone. Okay, the zone is from 4921 to this, the boundary of the Ichimoku cloud. Okay, very simple. If the S&P 500 remains in this side, okay, means above this the particular zone, then it will remain, means it will sustain. Okay, it will sustain, and also it can try to move up, it can try to go bullish. But remember, we are in the bearish trend. Any bullish reversal, even okay, whether it is a normal bullish reversal or a short squeeze or a heavy bullish reversal, it will be seen as an opportunity to go bearish, because the trend has changed. Okay, and we will follow the trend. If the S&P 500 remains below or fails to sustain at this the zone, then it will come down, and it can come down easily to the 48xx mark. Okay, what is 48xx? This is the very strong moving average on the weekly chart. Weekly chart moving averages are very strong always. And also it can come down to this the 47xx, okay, 2030, etc., whatever this the 200-day moving average is. Now any bullish reversal in the S&P 500 or any bullish retrace in the S&P 500 will be limited because of the Dow Jones. Now again the Dow Jones will create problem for the S&P 500. Why and how it is going to create a problem? Because the Dow Jones is trading in the bearish side, okay, and it is in the absolute bearish trend. Okay, and also if there comes any reversal in the Dow Jones, then it will be limited to the Ichimoku cloud itself. Yesterday also it failed at my very strong resistance level. Day before yesterday also it failed at my very strong resistance level, the Dow Jones. I am talking about the Dow Jones. And because of that failure, the S&P 500 failed to give any significant bullish movement. Yesterday also it tried, okay, it gave or it has put a lot of efforts, but because the Dow Jones failed, okay, so the Dow Jones, so S&P 500 had no other option but to come down, and the same was seen day before yesterday also. Okay, this means that whatever the bullish retrace will be there in the S&P 500, it will be impacted heavily by the Dow Jones itself. And because the Dow Jones is going to see very heavy resistance as of now, there is my heavy resistance as well as the boundary of the Ichimoku cloud, then the Ichimoku cloud itself is there. Okay, so we can see, or if we calculate from here, at most 1.94%, 1.94 or 2% maximum. Okay, 2% movement in the bull side in the Dow Jones. 2% movement means the 2% approximately in the S&P 500. So we can say, if we calculate the 2% from here, it will be around, okay, 5067, and the boundary of the Ichimoku cloud is around 5100. So we can say around 5067. Okay, 5067, 2% in the in this S&P 500. So S&P 500 has the potential to retrace to this much. And yes, there is one more thing. When the S&P 500 will be retracing, the moving averages will be coming down, and then the moving averages will also reach around 5067 or so. This means that any bullish retrace will be limited by the levels, okay, that I have, okay, that I disclose to my Patreon community members, and also the moving averages. This means there will be very heavy resistance zone in this the bull side, and that will put a lot of pressure on the S&P 500. And because that trend has changed and the S&P 500 is going to struggle, it will struggle, then it will give up, and then only it has chances to come down to the 200-day moving average. This means that the next week 2% in the bull side and 4.75% in the bearish side. Okay, now again you can see that there is a very limited movement in the bull side, 2%, and there is a very heavy movement in the bearish side, that is 4.75%. But guys, again let me tell you this, and let me remind you that there will always be a fear of the bear trap. What? Bearish trap. Bearish trap. Okay, why there will be a fear of the bearish trap? Because because of these the last two closing, S&P 500 is trading at this the K and the D saturation, as well as the Nasdaq is also there in the same condition, as well as the 4-hourly charts of the S&P 500, okay, it is there A lot of things are there. If there comes any movement below 50, closing was 4967, any movement below 4967, in that case it will create problem, because it will put the S&P 500 or force the S&P 500 to enter into the oversold condition. Now absolute saturation, absolute oversold, these technical conditions simply means there is a volcano. This volcano is simply there, and it can erupt anytime, means a bullish side movement. So I mentioned 2% in the bull side and 4.7% in the bearish side. It all depends on Monday and Tuesday, and you need to be very, very careful on Monday. It can give a bullish retrace or a heavy bullish retrace, but the good thing is that once it gives a bullish retrace, it gives a bullish closing, then it will be out of these, the saturation and all of these, the conditions. It will create more room in the bearish side, and it will fall. It will come down more and more. There will be more fall. Whatever you are seeing here, it is just the beginning. This is the tip of the iceberg. Okay, and I'm not denying that there will not be any bullish reversal. There will be a bullish reversal, because the technicals are saying that there will be a bullish reversal. Once there comes a bullish reversal, it completes or it fulfills its bullish obligation, will be the resumption of the bearish trend. More and more fall will be there. Now the bearish cycle has begun. But whatever is happening, whatever will happen, I will keep you posted. And if you want to trade the bearish side, the bearish movement confidently, then you can join my Patreon community, and I've given the link in the description of the video and also in the comment section. And guys, hit like if you like this video, and also if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you have any questions that you want to ask, then you can ask your questions through the comment section. So guys, this was my S&P 500 weekly technical analysis for the week of April 22nd, which means that from April 22nd, which is Monday, to April 26th, that will be Friday.